All right, good evening. We're going to give everyone about maybe 2 to 3 minutes for participants to log in. And we'll get started with the presentation in about 3 minutes.
So are there any participants waiting in the room?
Emma, did you have a question? I'm sorry.
Is the participant waiting in the room?
I'm waiting for them to log in, and usually I give individuals about 3 minutes, and once I let them in, then I start the presentation. But also, by the way, Emma, I don't see you. I just see the logo. Background. So just FYI. Yeah, I'm gonna give them another 2 more minutes, and then once I let everyone in, then you'll know I'll start all of the slides. So yes.
Okay, good.
Okay, I see a few participants in. I'm going to give another minute or two just to allow other individuals. We'll definitely get started before 5:05. All righty, I see a few participants already in, so it's about 5:04, and I think while I'm getting all the introductions out, we can allow other individuals to come in before the presenter starts. So good evening, everyone, and welcome. Thank you for joining us this evening for the home purchase webinar. I am Suhey Mojica. I am the Senior Coordinator of Business and Assets of the San Pablo Economic Development Corporation, and presenting with me tonight is Emma Biggie from Bank of the West. Before we get started, this webinar is being recorded. A recording will be available on our website at www.sanpabloedc.org. Any resources mentioned during the presentation will also be available on our website, or you can also contact me directly and I can make those available to you. We do welcome your questions. We will do questions at the end of the presentation. You definitely can feel free to type them in the Q&A box or in the chat box, or if you would like to ask the question live, we can also make that possible. So again, we will answer them at the end of the webinar. If you do want to put them in the Q&A, you can as we go through the slides. So in case you don't forget your question, and we'll get to it once the presenter is done presenting the slides. But just before I introduce our presenter tonight, I just want to give you a little bit of background in regards to what the San Pablo Economic Development Corporation is all about. We are a full service organization for economic growth in Contra Costa County. We are here to help you establish the critical connections you need to succeed in our diverse business ecosystem. San Pablo EDC also provides a broad range of affordable housing opportunities and services to enable low to moderate income residents to gain better housing and financial stability. We also offer various workforce programs, from career training funding, childcare funding for working residents, on-the-job training, and much more. If you would like more information in regards to our other programs, please feel free to visit our website again at www.sanpabloedc.org, or you can call us directly at 510-215-3200 for more information. I will also have my contact information at the end of the presentation so that you can feel free to give me a call directly if you have any questions in regards to any of the programs that we offered at San Pablo EDC. So with no further ado, this webinar was possible with the help of our wonderful partner, Bank of the West. We are grateful for their partnership and collaboration with San Pablo Economic Development Corporation, and this wouldn't be possible without them tonight. So our presenter today is Emma Biggie from Bank of the West. She is the VP Community Lending and Diverse Market Business Development Officer. She will be going over the home mortgage lending process and how to prepare. Emma, I'm going to go ahead and stop sharing my screen so you can share your presentation.
Thank you, Song-hee. Good evening, everybody. It's my honor to be here, and thanks San Pablo EDC to have us as a partner, and we really jointly together to support the community to help people understand homeownership and also understand financial literacy, to help people to manage the finances. Without further ado, let's start to dive in our tonight the content, obtaining homeownership, especially housing finance. I'm going to start sharing the presentation. Okay. So everything is okay from your side, right? You can see it. Wonderful. Thank you very much. Like Song-hee introduced, my name is Emma Biggie. I am the Community Lending Diversified Market Business Development Officer for Bank of the West in Northern California. I have been with the bank for 5 years in the current role, and been in the business for mortgage lending for 20 years. There's a lot of a story to share and a lot of life experience accumulated. So I would like to invite everybody to going through some a homeownership journey with me and understanding some basic about the home financing. Before we really start the content of a presentation, I would like to have a disclaimer. Everything released or discussed tonight actually of general information. There's no content involved any specific case or file decision. Now, let's talking about the benefit of homeownership and the steps to the homeownership. First, the benefit of homeownership in the large scale, we are saying is obtaining the homeownership is a pride owning the home of our own, put the shelter over our head, and also establish the family legacy, right? But if we're looking closer, actually homeownership is more than that, will provide a financial security to the household, will build up the equity, and also start to form the sense of a community from an individual base. Needless to say, that's a huge personal financial achievement. So definitely everybody will love and welcome that idea to become a homeowner. Now, homeownership is not a easy, I would say, is not an easy journey to travel. There are a lot of preparation, a lot of understanding, a lot of processing to go through. So there are some basics we do need to know from consumer side and also from a lender side. First of all, when we started talking about home ownership, we cannot get around the topic of understanding our credit. Credit is our financial ID, and also showing indicator of how well we manage our finances. And the other thing talking about home ownership is we need to look at it, what we can afford from the consumer standpoint, but also from lender side. The lender will looking at it, how much the person can be qualified for in terms of we are considering to borrow money to help us to obtaining the home ownership, to purchase the real estate. Then the next thing is getting into very technical about home ownership and housing financing is to understand the specific finance product, what type of mortgage loan options there, what type of a mortgage loan product programs there. And then we are really stepped into the processing. We got to organize our team to achieve our home ownership goal. So to hire the agents, to have that lender to have us regarding the qualification of the money, approval of the money, and then find a home is the alternative goal to really achieve this home ownership. On this slide at the bottom, you will see I have a Maribeth Javaro. She is the Bank of the West lending officer. Actually, she is the #1 officer assigned to working with San Pablo EDC to support a consumer. So that's I'm sorry. It's a distraction. So that's the loan officers we normally talking about, especially everybody in this room. Once we went through the education steps and get into the talking about connection with loan officers and get a pre-qualification, pre-approval, most likely you are going to talk to this person. Now let's dive in for the first item. We're really looking at it to obtaining the home ownership. We got to understand our credit, because credit is one of the fundamental facts for the lender and for the consumer to really see how we can get to the money. Lender use the credit is to make sure the person borrow the money has ability to repay the money back, and also has ability in the future to manage the finances in the better way. So those are the aspects we're looking at it. So understanding the credit is very, very important. And for our consumer, because we understand our credit, we can avoid to step into some trap or misbehavior to cause some consequences that will jeopardize our credit history and the future credit opportunities. Talking about credit, we do need to look at it, credit report. How are, as a consumer, how can we get it? So this is the website is for every consumer can access to our own credit report for free, which is the annual creditreport.com. This is the platform from the 3 bureaus, the common platform to offer the report to the public. Currently, due to the COVID, the bureau actually have this website open. You, as a consumer, we can access to our credit report more than annually, more than once per year. You actually can get the report of more. Oh, I'm sorry, Bart. Bart.
We'll just give our presenter some time to work with her dog. This is the new way of virtual meetings. We're all working from home, so.
I'm sorry.
No, I was just letting them know this is like the new normal, right? So.
Yes. Well,
Yeah.
that's also my my office partner here. So through the day, he's just be my partner and to stay with me here for the whole day. So back to the annual credit report. So this is the website. If, as a consumer, we can access to our report. Because we're in the virtual, we have a lot to cover tonight, content. So we're not to have too much classroom interaction here, but I want to say, put this as a homework. Everybody in the classroom, after this whole this workshop, the first thing we should be looking at it is go to this website and pull at least one report from one of the bureau, and then look at it, what's on that report. I will guarantee you a lot of times, almost 99% of the times, we will be surprised by how much information is on that report and overwhelmed by the information they released on the report. So that's something is homework for people to take away. And also there's other contact information regarding the annual report request services. This is the places we can actually call and in contact with to correct some report errors and things, mistakes. Here is first tip of the night. Whenever we reading our credit report, make sure our personal information or identification information in our credit piece has to be 100% accurate. So if we read the report, find something is not accurate, even if it's a tiny thing like a misspell the name or certain numbers are different, date of birth or street address number are incorrect, even those tiny, teeny errors should be corrected because the consequences can be huge. And also can be involved some other identity theft or fraud. So that's something for everybody to be aware. Now we really get into the credit content. This is the industry famous pie chart talking about what is the credit piece will impact our consumer life, impact our life. As I said, credit is our financial ID. This ID is our backpack, is always with us, but they are not visible in front of our eye. So a lot of times we keep moving, but there are some certain report are constantly accumulating the data without our conscious realization. So some of those information actually have a major impact about our financial life. Now, looking at how the credit bureau or creditors measure our credit, here is the whole pie chart gave us analysis. On the left side, we will see there's two numbers are a little bit large numbers. Basically, this pie chart is 100 points. The 30 points and 35 points, which is quite a lot of weight given to the payment history and pay amount owed. These two items are very important. When we're looking at a payment history, what it is, basically it's very simple, is how we treat our payment. Do we pay the bills on time? Sounds like very simple because it's so simple, and actually in real life, that's the almost the weakest link we can cause problem because it's so easy. We can easily overlook. So payment history carry 35 points weight on our credit rating. If we pay the bills on time, that we can totally earn this 35 points. But if we have some mishap or missed the payment, there will be a drop for the score or for the major impact on the payment history. So that's something for our consumer to really be aware and pay attention to our monthly behavior for paying the bill. The next item is amount owed. Amount owed, why this item carries so much weight? From the surface, we know how much we own the money to somebody else, but also this number is an indicator is for our household debt or liability, financial liability. Another tip, the second tip of tonight is the 30% of amount owed on the credit rating actually can be treated as pretty standard, the household debt to income ratio. In other words, monthly income, all the household liability add up together against the household monthly income. If that percentage is stayed on around 30%, that's actually considered is very good credit standing. So this is a kind of a tip for us as a consumer. Even you do not know how the other people looking at our household finances, the situation, just by ourselves to calculate, we can actually do this calculation for ourselves and figure out, oh, is this the good standing or not so good standing? So that's another homework everybody in this classroom can do something tonight is when you go home, you can sit down, well, you're at home, I'm sorry. So we can sit down and punch all the monthly expenses, the numbers, and calculate the lump sum all the income numbers together, and using those two numbers divided each other and see where's the percentage landed. If you have this ratio is about 60 or 70, you probably need to be very, very careful because that's already showing the household ratio is a little bit tight. What I see the little bit tight is the income source, the resources we can fall back on is tight. It doesn't mean is we cannot live a life, we can. But if we have some unexpected responsibility to taking over, or we have some certain emergencies to taking care, then our finances definitely is going to have some strain to looking at it. That's one thing. The other thing is, how about our budgeting? How about our planning? Because that's directly related to how much resources we have in the household. So this 30% point in this credit rating, even we talk about is credit, how people measure our credit behavior, but actually when we look deeper, that's more than that. We're actually looking at our household finance arrangement or money management. The other three sections, the points, is pretty stay on the low side, but also carry some impact. This is very important. New credit, why the new credit carry 10%, 10 points, the weight for impact our credit, because new credit is the way to indicate how much more liability we're going to take in the future down the road. And do we have that ability to take the new debt? And also somewhat is to tell us if we take the new liability, is that necessary? So those are the questions we're going to ask ourselves. Not only that, go further, the creditors, the lenders is going to ask a similar question. And those questions are on the table for the lender to qualify us for the money we're asking for. Length of credit history, that's also important. The basically is to tell the lender and also to tell ourselves how mature we are to handle our credit. Are we experienced? Are we familiar with the financial system? So those are the talking point on the table. And credit mix, that's definitely is showing how capable we are handle different type of responsibility, because liability comes in a different type and shape and form. So credit line is one, the installment loan is another, car loan, student loan, those are installment loan. And the mortgages, that's a big, giant, large debt liabilities. And also medical bills and all kinds of credit, open credit line, not just one credit card. The credit card inside has different categories, a store card, prepaid card, or the regular high interest credit card. So all kinds of a card, how can we handle those cards in regards to, on the left side, payment history, because we can manage the money for the different type of the liability. We manage the money to satisfy the debt responsibility. So we talk about the details of the credit, the content of the credit. Well, the good part, we're going to have a credit, but also the not so good part is there can be a mistake, there can be errors, there can be incident happen, and we will have a impaired credit, we will have affected a credit, or we say a poor credit. So for that type of a situation, how are we going to help ourselves to reestablish or establish first and reestablish? So there are some tips for everybody to looking at it. First and foremost, to remember, pay the bills on time, regardless, because this is pay the bills on time is showing our characteristic, how we handle the money, how even as a moral side, how we mentally and psychologically treated our finances, how we take the money as a way to communicate with the society. So those type of questions actually will be reflected by the credit, pay the bills on time. Get a credit for making utility, cell phone payment, this is majorly talking about in the lending industry, we're talking about a traditional credit, which is every data recorded on the credit report, but also there are some certain credit data is not collected, not reflected on the credit report, which is used to be the utility bills or your service bills. Those type of bills may not be showing on the credit report. If that's the case, how are we going to using that data to satisfy our credit inquiries, inquiries from the lender to check our credibility? So those are type of things we're talking about. We can verify the payment history, verify the pay bills period on time or not. That's actually the lender has extra processing for that. And do not close unused credit card. This is another oldie saying, but is goodie saying, is a lot of people, because the life progress, they open some certain the credit line a long time ago, and then afterwards time change, lifestyle change, and life stage change. So people are faced in a new range to adopt some new ways to handle the finances. And some histories, the people say, well, I just shutting down. I do not need those type of a history anymore. But guess what? In the finances, especially talking about the credit, old history is good history. Why? Because that's how the creditors see us. If we close all those accounts, eliminate all those history, we pretty much wiped out our the prior existence. So in the finances, if we don't have that, we're underground. So there's no records to fall back on. There's no trace about us, how good we are handle our finances. So this is a very important. Unused debts or responsibilities and credit cards, open line, especially talking about the open lines, do not close them. Of course, in life, you say, well, if this line charging me too much money, I probably spend more money on the line to keep it open instead of using it for my own purpose. If that's the purpose, the situation, I would consider is, as consumer, we got to evaluate what's the priority for us, what is good for us looking forward, and then you make the right decision. The next thing is just to remember, if anybody need help, there are some agencies can help consumer, which is the HUD agencies, and especially San Pablo EDC has the counseling services, has the help services, is counselors or repair shops, and can really helping our consumer to understand a lot of the problems and get education. So that's why everybody come into this workshop, is it right?
I guess I'll add something there, Emma. Yes, if someone is interested in getting a resource, we don't actually have it in-house, but we can definitely refer you to some of our other partners who do handle this type of, one-on-one help. You can definitely reach out to us and we'll put you in contact with someone that can help you with that.
Yes. So that's the good thing is everybody need to make a lifetime friends with Sohee here. And so Sohee can help you to get rid of all the headaches. Is that right, Sohee? Now, the next thing is we're talking about home ownership. The topic we cannot avoid it is source of a down payment. This is a big topic because nowadays, pretty much everybody looking for purchasing the real estate is a first thing from the lender and from an agent and from ourselves. We'll see, do we have some, the first down payment up front to show our the sincerity to purchase some real estate. And also as a lender, as an agent, they want to see how much the skin of the game we put in as the consumer. So this is a very important. And beyond that, technically, if we borrow money to help us to purchase the house, any other lender lend us money, they also wants to see how much money we can put up front as of a personal investment is seriously to purchase this property, seriously to take this homeownership business. So with that said, looking at the down payment is a sincere topic here. Down payment money, resources money can coming from a different channel, different corner of the road, right? So some of the majority of those can coming from our consumer own savings, own accumulated asset. Needless to say, you can go fall back on the retirement account, 401k, to be just for everybody's information, the standard 401k program actually has this function, can help first-time home buyers to take out the money to purchase the house without a penalty for taking out that some money out of the fund. So this piece is very important. If we are the first-time home buyers, you do have a established 401 portfolio, you can talk to your 401 portfolio manager and to say how much you qualify to take out. Each company's 401k program set up is slightly different, so the takeout for the first-time home buyer purchasing will be different. That's one source of for the down payment source. The other piece is government grant program or subsidized secondary financing. What this subsidized secondary financing, this is commonly talking about down payment assistance program from a city level, from a county level, and from a state level. So let's looking at we're going to looking at our host San Pablo EDC currently has two down payment assistance program. One is a WISH program. So he actually is a director to manage that program. So everybody is going to go through her to get to see whether we're going to qualify for the WISH, the down payment. And the other one is a splash down payment program. That's from the city of San Pablo. Here I want to put something for everybody is when we talking about down payment assistance program, we got to treat that program seriously, just like we get them, we want to ask money from other financial institution, borrow the money, because down payment assistance program, unless is a grant, what's a grant? Grant is a free money, but unless the grant, even certain grant is going to have a qualification criteria, and also those criteria and condition is listed as guideline. As a consumer, if we want to using that fund, want to use that resources, we do need to meet that criteria, and also that criteria is a separate independent criteria aside from your first lender's mortgage. So that's a parallel together. So as home buyer wants to use the down payment assistance program, I can assure you, you all go through two qualification processing. So you're not going to qualify your first mortgage with your lender, you also need to qualify for your down payment assistance program. And guess what? The down payment assistance program and the first mortgage lender, they got to work together too. So with that said, that's require our consumer pay a lot of attention if we want to use this type of resources and really work closely with our program administrator and lenders to work out the solution for the program. And also the other source of down payment can be a gift money from a relative. For this piece, I just put on the table, there's a processing for this. If you do use the gift money from a relative, there is a written set guideline to follow. The lender needs evidence for the gift money, the source, the evidence, and also the relationship about the giftee and the donor. So the whole processing, the loan officer will talk you through it. And also soon he will help you to understand. Because here is the thing, if I put my lender hat on, I would say if somebody comes in, talk to me and also talk to Song-hee, me and Song-hee are going to work side by side. So that's gave you just, we both are here to help you. We both are here, but as a consumer, we do understand you work with both persons here to get help. And also the other source of the down payment is cash in hand. Be careful about the cash in hand in this situation. A lot of people said, oh, I just have a lot of cash lay around in the house, I want to use it. So be careful. Why? Because if it's a really cash lay around in the household, we need to figure out where the money source is eventually, where the money coming from. We know the money is not growing on the tree, and also you cannot get the money from the farmer's market. So definitely there's something is we need to verify the legitimacy of the money. For that, there's a certain procedure to go. And also not a lot of lenders program can accept cash in hand as a down payment source. So pretty much for all those incidents, the lender will require the home buyer to have the money deposited in the bank to go through the common legitimacy processing and season the money and then use the money. So that's some piece is be careful when the people start shopping for the home and get ready to pick up this topic and talking to Song-hee or talking to my loan officer and make sure we have the money is legitimatized and also to go through the regular channel. Defining mortgage terms, this is quite a basic. We want to pick a couple of things just to give everybody's taste of the how lender qualify the home buyer for the mortgage loan, and also what are the key qualification items a lender is looking at it. Because here's the thing, in reality, once we stepped into the homeowner purchasing processing, a lot of work is going to be done by the lenders, by the agent. So from the consumer side, consumer almost always is passively follow the instruction, right? So we are not the person really involved in decision making, but we are going to provide the information to help people to make the decision. So that's why here have some basic items or fundamental elements to, as a consumer, we understand how the other people using this type of information to make a decision. First, it's debt to income ratio. This is a lender's qualification item, and this is a key item for the lender to decide how much money they are going to lend it to the borrower, to the home purchaser. Talking about the debt to income ratio, we normally, from a lender perspective, we're looking at a two debt to income ratio. One is a front debt to income ratio, front ratio, which is we call it is a housing ratio. That means is in the future projected, we projected when we're purchasing this house, how much the expenses are involved or surrounded around the house, only related to the house, has nothing to do with anything else. So what are those housing related expenses? Can be mortgage, can be property tax, can be insurance. That's actually is the next page. I just talk ahead of the next page information. We call it in the lending industry, there's another term we call it is a PITI, principal, interest, tax, and insurance. Those are the items are related to the housing. And nowadays, because a lot of house, especially affordable housing project, there's a property management involved. So once people purchasing the house, you may also have a property management fee. That's also part of the house related expenses that can be put into that debt ratio calculation. So for that debt calculation, the lending industry, the benchmark is a 33%. So what's the 33% is this liability, projected liability versus your monthly, the household income, and against the percentage, what's the percentage rate come out? This standard is, or benchmark is a 33%. Then when we're talking about the other ratio, which is, this is the front ratio related to the housing. But beyond the housing, this household currently already have existing liabilities, already have existing expenses, like credit card, car loans, and all those. So if we added those long-term, the household liability into this housing ratio, that's considered is debt to income ratio. That means it's the household total liability versus the household income. What's the ratio is about that? Currently the lending industry's benchmark is 43%. So from the front ratio or housing ratio 33 to the back ratio and the debt to income ratio, the standard is 43. The in between the margin is 10%. Now, when I gave you this percentage, you actually can, everybody in this room can calculate your own household ratio. Why is that? Because you say, a lot of people have a question that, hey, Emma, here is a problem. If I make $100 and you're using this formula to really kind of a cookie cutter me and to say, okay, so he make $100, the housing ratio is cut it as a 33, and the income, total household income ratio is 43. Well, what's the rest of those $57 leftovers? I'm not using it. I would like to put all the money in the house. Okay, so here is something to help you to understand. When we calculate this formula, doing this percentage to set up the standard, the lender set up this to running into the using the base calculation, the income actually is gross income, is before tax income. So in reality, everybody looking at your household, when we pay our bill, what type of money we're using to pay the bills? We're actually using after-tax money, right? So that's a net income. So here is a major difference because we are doing the before tax and the after tax. If you using the tax bracket to recalculate, use the formula to recalculate, you will find your money resources shrink. So we really have not much money to handling a lot of debt because we need to consider to pay the taxes. So for that reason, why the lender said a par is a little bit low. So that's will resolve that calculation, a lot of confusion there. The down payment, we talked about it. The industry down payment is threshold is 20%, is ideal way, but doesn't mean if we don't have a 20%, we cannot borrow money to purchase the house. The only thing is we have a way resolution for if we don't have a 20% standard down payment, we can do is to pay mortgage insurance to increase our purchasing power. What is the mortgage insurance? The mortgage insurance is to ensure the lender to lend us more money, the large sum of money, and to buy bigger price tag house to resolve the borrower's less down payment situation. So that's the solution for that. Mortgage insurance is not a bad thing. A lot of people say, well, I don't like that idea. I buy the mortgage insurance and the insured person, the beneficiary is not me, it's a lender. Yes, that's lender. And the home buyer or the borrower is going to purchase that insurance for the lender. Why is that? Because the lender is going to guarantee the consumer, which is buyer and us, to have a higher purchasing power. So this is a loop around, circling around, but eventually is we're using our own money to give us a leg up to have a high purchase power. Fees and cost, this is another favorite topic. A lot of people are very sensitive to the fees and cost, which is we all are, because that's the expenses we got to consider. And especially for large purchases like this money is going to be there for us to pay. So this is a very, very important piece we need to understand. What type of fee is going to be charged in the transaction? The fundamental thing to help everybody to understand that any transaction on earth has a cost. We call it is opportunity cost, right? So for consumer, opportunity cost is we spend some money to get something. But in this case is cost is there. Who paying the cost is questionable. Because when we are the home buyer, we purchase the house, we organize the team to help us to purchase the house. Guess what? Everybody in that team help us to purchase the house may have the opportunity to help us to minimize our expenses, minimize our cost. So I put this on the table for everybody to think about it. The bottom line is when we stepped into homeownership, you thinking about we are the host to initiate this transaction, and we have the power to negotiate and using that power properly. Now, escrow reserve, that's basically is pretty much easy to understand. That actually is a trustee fund, has nothing to do with cost for the transaction, is more reserve fund for the lender to collect the money to helping the home buyer to pay tax and the insurance. So this money is got to be paid from the buyer to the related to the house expenses. It's just who is handling that at that transaction. So it's not something complicated. Song-hee, I see somebody in the chat has some question. Oh, we have 8 limits too. Okay, thank you. Mortgage payment, we talked about the PITI. This is something definitely you will understand about the mortgage payment when you get into contact with your lenders. The loan officer will explain more. This is the mortgage payment content. Pre-qualification and pre-approval, that's a 2-stage for the lender to give some sort of assurance to the buyer regarding how much money the person can take out of the bank or take out of the lender. Pre-qualification basically is just the estimate. There's no guarantee. Pre-approval, on the flip side, is more of firm assurance because they are going to go through some processing to get that confirmation from the lender how much money you can borrow. Loan products and the programs, everybody need to go through this because once we are getting in contact with the lender will discuss with the home buyer about what type of loan program will fit in the purchasing situation, and also what are the specific clause and the terms and specific. This is the piece actually the buyer is going to have a taste about the term of the loan, the interest rate of our loan. That's a very, very exciting piece. And also what type of a program in the future has some future outcome to impact the household life. There's a lot of, I can tell you, there's an ocean of lending products and programs there because there are numerous lenders there. The association can offer you the product. So just to be careful, ask a question, prepare ourselves to meet the lenders and ask, why this product will be better than the other product, right? So common knowledge about would we like to be fixed rate, interest rated loan or the adjustable interest loan? It's easy to understand. A fixed rate is a rate never change. At the adjustable rate, the rate can be changed. So what's the risk we're going to take in that situation? This is kind of like a very interesting page I want to show people just for a taste of a certain product. This is the Fannie Mae Home Ready product. Is a community lending first-time home buyer product to carved out for first-time home buyer. You only need to 3% down payment. And also this 3% can be substituted by the down payment system program, by gift money. So there's no requirement for that 3% has to come in from the buyer's own money. So this is keep the door widely open for the first-time home buyers. We can solicit a lot of help for ourselves for our home purchasing the transaction. Key elements to finding a home. Yes, we do need to know how much we can afford and how much we can qualify, because afford is one thing, qualify is another. What type of a house we want to have. So that's also very important. And the key thing is, remember, we're purchasing a home purchasing a house as a consumer. This is a big transaction. We do need to feel very comfortable by every step of processing and get through with all the people helping us to achieve the goal. So comfortness is a big thing for the consumer to remember. Here is some resources in our neighborhood. You can looking at some certain down payment. As I said, San Pablo has a WISH program, is a wonderful program. That's actually a national program. So the WISH program specifically is considered is a grant, but there's a precondition we have to meet. So to satisfy, we don't need to return the money. So that's something. And also for the people have the intention to buy in the other cities, in the other areas, in the Bay Area, you can see there's a lot of programs out there. And luckily, it's Bank of the West actually involved almost every one of them. So if you are considered to using some resources, let's establish our contact and connections. We can help to explain more in detail. For borrowers, different type of borrowers, we also can do I-10 people. There are some certain conditions we have to meet. So definitely just to let everybody know, we're not, we do need to meet the guideline, but also there's a leniency or there's opportunities for people coming in to get a mortgage loan, get a home finances. Owning the home can be possible. The most important message I want to pass on here is a lot of people has concern, well, if my credit is not good enough, can I buy the house? If I do not have enough down payment, can I buy the house? Well, how good is your credit is, let's start a conversation, because you think how good you are and the lender think how you qualify for that. That can be totally different story. You think you have to be 780 to get a loan. For lender, probably 620 is good enough. So there's all those situations, and also whether you can get a down payment. Like I said, a down payment, the system programs there, and also the loan program can tolerate a lot of the down payment assistant solutions there. So there's a lot of ways to looking at this subject. Definitely open the dialogue, open the channels is going to be very helpful for us to really know what type of resources we have. So most important thing, the resources is better than the firm answer, yeah and no today, right? Because resources carry us for a long way to achieve the home ownership. So with that further ado, I think that's pretty much all for tonight. I can talk a lot, but definitely thank you everybody for being with me, and any questions, welcome to let me know.
Thank you, Emma. So I do want to be respectful of everyone's time. I know it's 6 o'clock already, but I did want to just give some pointers based on some of the information that Emma gave out today. As you can see, she really condensed a lot of information into 1 hour. For anyone that's on this webinar today, this is for educational purposes. If you are in need of finding a HUD-approved workshop that provides the hours that are required for you to get a certificate to be able to use any of the down payment assistance programs, some of the ones that Emma mentioned that we work with here at San Pablo EDC is the WISH program and also the SPLASH program for those looking to buy in the city of San Pablo. You can definitely contact me or email me, and I can provide you with some of those providers. Unfortunately, because of the pandemic, most of them, or actually all of them, I believe, are done virtually right now. There's none, I don't think I've heard of any in-person workshops as of yet. Hopefully in the future, San Pablo EDC will be able to provide those certified HUD-approved workshops. But again, this is more for informational purposes so that whoever's interested in getting more information as to connecting with Mary Beth from Bank of the West to see where you can start and see where you are in terms of, buying your first home. I can definitely make that connection. And then if you have specific questions on any of the down payment assistance programs that we administer, I'm more than happy to provide that information as well. As Emma mentioned, it's not just about qualifying for the first mortgage. That lender will have their own requirements, but these programs also have their own eligibility requirements. So we want to make sure that you're eligible to use or to qualify for those funds so that your lender knows ahead of time to work with you based on that assistance that you will be receiving. So I think basically, if there's any questions, please feel free to email me or call me, and I will be more than happy to answer any specific questions that you have. I think for now, Emma, the only question that I had was how much credit or how many years of credit history do you need to qualify or apply for a mortgage?
Wow, that's actually is good a question. I would say if talking about history, I need it as long as possible, right? But documentation wise, we need to say at least 2 years.
Okay.
And also for the trade lines, if talking about the credit part, the lender would like to have the person has at least 3 trade lines.
Okay. All righty. Okay, well, I think that's the last question that I had. And if there's anyone that would like to ask their question live, you can raise your hand and I can let you ask it live. But if no one else has any questions, I do want to thank our presenter today, Emma. Thank you so much for sharing such great information and resources. And then also thank you to all of you who joined us today. I also want to say that this is one of our first webinars this year with Bank of the West. We will be having more webinars throughout the year to prepare anyone that's looking to purchase a home or just to see what resources are out there that can help you budget better, understand banking a little bit better, more of a financial literacy. At some point towards the middle of the year or towards the end of the year, we will be going again over home purchasing. We'll go more into the different types of down payment assistance programs. We want it to be this just an introduction. So please, if you are interested in attending our next webinar with Bank of the West, visit our website, as you can see here, and it's on our calendar. If you want me to send you the calendar directly, I can do that as well. So if you are interested in joining us for more of this educational and informational webinars, we will be having more throughout the year. So we do welcome you to attend those. You learn a lot, things that maybe you already knew, but then there is information that could come in handy that you may not know already. So again, if you want to follow up with the lender from Bank of the West, her information is here as well. Or if you would like me to make a warm introduction, I can also do that. So you can feel free to reach out to them directly or to me. And I hope that you all have a wonderful day. And thank you so much again for everyone that joined us tonight and taking time out of your day to learn this valuable information. And Emma, also thank you for being such a wonderful partner to San Pablo EDC.
Thank you, Song-hee.
Okay, thank you, everyone. Everybody. Thank you, everyone, and have a good night.
Good night.
All righty.